Hey everyone, and welcome to Earnings Cheat Sheet for Friday, January 17th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you get through the week ahead. So, Ed, what do you got on tap for us today?
Yeah, I want to take a look at Netflix, Interactive Brokers, and GE Vernova.
All right, well, let's get moving with Netflix, which is scheduled to report Q4 earnings on Tuesday, January 21st. Earnings are expected to jump nearly 100% to 421 per share, and revenue is seen climbing 15% to $10.12 billion. The streaming giant is also expected to add 9.7 million subscribers. And here's why we're watching Netflix. The company is not going to be providing subscriber figures going forward, so the focus will be on revenue and operating margin. All right, Ed, and we saw Netflix had some good growth last year. Global paid memberships were higher. They also saw a higher average revenue per membership. And I think analysts are really banking on Netflix being able to grow that subscriber base and retain it, along with the growth in that advertising business. So, what's on the radar with Netflix?
Yeah, I mean it's impressive how they've become a must-have. I think people just like, and they've been able to raise rates. They have the lower tiered ad rate, so advertising is part of it. That's one reason why they're shifting away from subscribers. They're trying to show like revenue and operating margins. They've been able to do the password squeeze and get multiple people out of that. And honestly, they're spending less on content as I think is a share of revenue. So it just means that the revenue growth has been solid, but you can see, the profit growth has been tremendous because it's just like they're just, revenue is rising a lot more than costs. And so that really makes a difference. And this is the gold standard in streaming for sure.
All right, well, let's take a closer look at the chart, Ed, because as you mentioned, those revenue numbers really looking nice here over the last few quarters. But talk to me about this chart because we saw this bad break below the 50-day line here on January 10th. It looks like it's trying to work back its way back up above that level. But what would you like to see set up here as earnings approach?
Yeah, it'd be nice if it got toward that 50-day line or even got above it. But to be honest, it wouldn't be so bad if it doesn't make a big move to the upside ahead of earnings because look, Netflix makes big moves on earnings. And so whether you wouldn't want to be in a situation where it moves and you really feel like it's buyable now, then you buy it. Now, maybe you're lucky and it surges 10, 15%, but it could also drop 10% over, in the next day. So it'd be great if it were more of a situation where you're waiting for an opportunity to buy. The 21-day, the 50-day line is there. And it is interesting. Before that bad break, it was looking pretty nice. I mean, it was sort of trading tightly. It was a gentle, dignified pullback to the 50-day line. It's when the rest of the market was sort of struggling, that relative strength line barely fell at all until right near that end. So that, it was disappointing. Doesn't mean it can't come right back and do that because obviously the market's having some struggles, or at least up and down. But yeah, that's what you'd want to see. It'd be great if it would be setting up and then with earnings you have an opportunity to buy, assuming that it goes on the upside.
Right, we see the lighter volume here on that gentle and dignified pullback. I'm going to switch to the weekly chart here. Anything that's standing out to you, we can see a flat base here on the weekly chart with a 941.75 buy point, but obviously it'd be great to see it get back above that 10-week line.
Yeah, exactly. And you can see how tight it was. And it's only a 13% deep base, but almost all that drop was sort of in a week and a half of selling. So again, just has to make a little bit of a comeback, but it has to hit a huge run. Still could have another one. It's still supposed to have solid growth in 2025. So we definitely will be looking for whatever metrics they do decide to give us next week.
All right. Well, let's take a look at the next name on our list, which is Interactive Brokers. That company is scheduled to report Q4 earnings on Tuesday, January 21st. Earnings are expected to rise 22% to 184 per share, and revenue is seen climbing 19% to $1.355 billion. And here's why we're watching Interactive Brokers. We'll be paying attention to customer growth and interest income figures. So, Ed, in the third quarter, Interactive Brokers earnings grew a pretty healthy clip, and the brokerage firm slightly missed some earnings estimates because of higher costs and one-time charge. But it seems like they're really seeing growth in that DART revenue, which is daily average revenue trades metric. So what are you watching with Interactive Brokers as their earnings approach?
Yeah, I want to see that trading volume growth. Want to see maybe the net interest income. I mean, they're charging margin, and that's an important deal. And with the yield curve being positive, that's positive not just for banks, but for any financials that are borrowing short and lending long. So those are positives for this name. Definitely want to watch this one. This one is has a lot of nice tools in it, and the growth has been really solid. For this company for quite a while. It's definitely the leader in this group. While Schwab and some others have struggled, Interactive Brokers has really done quite well as a stock over the past year.
And let's take a closer look at the chart because we can see working on this cup with handle base with a 193.41 buy point. So what are your thoughts with the technical action?
Yeah, I mean, it was flashing some early entries a couple of weeks ago, and that sort of faltered. Like if you bought it when it first rebounded from the 50-day line, like 2 weeks ago or so, that offered an entry, but it pulled back. It didn't entirely. It didn't get wiped out. If you bought it, there's a good chance you saw modest gains wiped out, but it found support. It's formed a handle. There was some volume on the way up, a little less on the way down. So sort of providing a shakeout. The relative strength line is still near highs. It's found support at the 50-day line. That didn't really ever show real serious break. So, it's shown some resilience in a sort of tough market, finding support where you'd like it to. Hasn't necessarily been easy because of that, but it's one that, even if you played it and got shaken out of it, could still set up and provide another opportunity here.
And talk to me about some of the fundamentals because it looks like earnings growth decelerated last quarter compared to the previous quarter, and particularly year over year. What are your thoughts here looking at the weekly chart? And again, we can see it, powering above that 10-week line this week.
Yeah, the comparisons are getting tougher, and that looks like it's going to be next year as well because the 13%, like 17 was like it was over a 44%. So some of these gains just getting tougher to build on after a long stretch here. But there's just a lot of growth in this area still, and so it may not have the same kind of because it's had a streak of some really strong growth. If the earnings growth slows, that could ultimately mean slightly slower pace of growth for this stock. Maybe it's not going to have a run the way it did last year. Doesn't mean it can't have a nice solid performance going forward.
All right, well, let's move on, shall we, to GE Vernova, which reports earnings on Wednesday, January 22nd. Now, the energy equipment manufacturer, that was a split off from GE, is expected to see Q4 earnings climb 35% to 230 per share, and analysts expect revenue to rise 6% to $10.687 billion. And here's why we're watching GE Vernova. We'll be paying attention to any news or projections on big tech reserving gas turbines for data centers. We'll also be keying in on natural gas demand commentary, and we'll want to see if there's light at the end of the tunnel for offshore wind losses. So at GE Vernova jumped on January 14th after Bank of America analysts raised their price target for the stock ahead of earnings. And analysts are really liking the opportunity here with those gas turbines and also seeing some opportunity maybe for steam turbine growth here. So, what are you liking about GE Vernova ahead of earnings?
Yeah, anything that generates power seems to have a lot of power these days. And GE Vernova, it's only been public as a separate company for less than a year, really done well. There have been some tricky times, along the way. It does have lumpy earnings as well. That's just something that you have to know. So you have to look at the underlying trend and what people are saying about the underlying growth. But the general trend is very powerful growth through next year at the very least. And so people want to see that, see if we're going to continue that growth. Offshore wind, as I say, like, has been a trouble spot. Is that going to sort of like be in the background? And just seeing how that demand is, it seems like there's unlimited demand. Obviously, expectations are high for this stock and a lot of others. And it's also this is sort of one of the first power generators. There's others that are actually the actual utilities, but this is definitely providing those turbines to generate that kind of electricity. So I think it'll be important not just for GEV, but for a lot of players in the power space.
Yes, a canary in the coal mine, so to speak, on how those might perform. But let's take a look at the chart because this one's looking a bit extended from a recent breakout here on January 3rd. Great RS rating as well, that RS line trending up. So what are your thoughts here with GE Vernova?
Yeah, there were opportunities to buy maybe really early in the year. And, now, and maybe if you really were sort of like doing an add-on, you could have been aggressive earlier on when it sort of cleared this sort of short little area, above the top of the base, but now it does feel extended, as you're saying, unless it pulls back and wouldn't want a really sharp pullback. So you'd need something, it may just need time to like have another tight pattern or have 50-day line catch up or a new base. It just sometimes if you may have missed your opportunity on this one in the short run, but as it's gone on runs before, it could go on more runs. With that kind of growth, stocks like this can go on, you know, run after run after run. You don't necessarily have to grab it on the first or even the second base to get some solid gains.
Right, and you can see this nice run it had from this last breakout back here in July 2024. I'm just going to toggle over to the weekly chart real quick and get your thoughts because, again, we can see just that powerful growth and nice move this week, but very clearly extended.
Yeah, and there was way back in that prior base, there was a big shakeout week, and there was some concerns about offshore turbines, and so the stock sold off very briefly and then came up. So and it looked volatile, but once it got going, it really got going. It's like an engine that sputtered for a little bit. This was the first real
Full
base that
steam
it
ahead,
had.
shall we
What?
say?
What?
Full steam, full steam
Full
ahead.
steam ahead. And and it really took off at that point. But there's a little bit in it. So, it was a little bit messy isn't because it was sort of an IPO type of situation, but really has shown power since then.
All right. Well, those were some of the big names on our list, but let's take a look at a few more on our radar, starting with GE Aerospace, the sister company to GE Vernova, I guess. Let me switch back to the daily here. Uh, this one looks like it's building that right side of the consolidation, but moved above that 50-day line on the 14th. So, what are you looking at with GE Aerospace?
Yeah, there seems to be some strength in some of the aerospace type of names. This is not one of the leaders yet. I mean, it was, but it's trying to regain that leadership. Certainly could have been actionable at this situation. Now there's earnings coming up and it's already moved a fair amount off. But also note that in the past couple of days, not only getting up to one, that trend line and everything, but it's even above the old buy point of 177. That's not actionable, but it's getting over some levels that people may have bought at. It's always nice to get above some of that kind of area trading. Uh, so we'll have to see. I mean, this is one that's had some benefits from Boeing's woes have actually helped because people have been servicing those old jets. Uh, but this one went on a big run. Maybe it needed to take a long break, and it has taken a break from since last spring. It made a really powerful move. And part of this was when it was part of GE, but a lot of this run, even when it was GE, was on the hopes for the GE Aerospace. They thought that was the hot spot, and GEV not as much. But it's taken a long break now. Is it ready to go on another run? Maybe it still has solid earnings guidance, for 2025. So have to see how that goes, but definitely could be something that might be actionable when next week comes around.
All right. Well, let's take a look at United Airlines. That company also reports earnings next week. And, this one again looks like it hit some new highs this week. But what are you looking to see set up here?
Yeah, I'm not quite sure because it's like it's at the top of the space. You could use that. There probably was sort of like a shorter term high that it cleared maybe last week, as well, whether a downward sloping trend line or just a short term high from like a few days below that. So it will be interesting. We've already gotten Delta Airlines, so it may not be a shock and a surprise so much, but it'll be, so we'll have to see how this one goes. Really this has been the leader in the airline group. I mean, this one, UAL just came on really strong, and the numbers aren't really there yet. You look at those earnings, that's not really that great, but people are really expecting a turnaround next year with earnings growth. So see how that one goes. So how that goes and plays out is really strong. If it pulled back modestly, it might have some entries, but if it took off, it might be extended. So it's not clear if this one will have an entry, but this one is one of the leaders in the travel space for sure.
All right. Yeah. And looking at the weekly again here, you can see just really powerful move since summer of last year and digesting some of those gains. But we'll keep an eye on that one, Ed. And let's jump over to United Rentals. Give me your thoughts on this chart.
Yeah, this one, it's rebounded this week. It's buying one of its peers. And that apparently people like that, how that one's going to work out because it's made a nice move. Uh, this had been doing pretty well, but it recently came down quite a bit. That was a pretty big sell-off that it had. It needs to get above its 50-day line. I think ideally it would get above the 50-day line, maybe pause, because if it goes straight up through the 50-day line next week with earnings, that's a lot of days it will have gone up. And so it'll feel due for a pullback. That doesn't mean it has to. You could keep running, running, running. But it just seems like the odds would be better if it get above the 50-day line, maybe pause for a while, then move from there, some kind of handle or something like that. But we'll see what we get. This one has been a solid performer, but has taken a break for much of the past year.
All right, well, let's wrap it up by taking a look at American Express. This one, recent breakout here on January 15th, still in a buy zone. So, what are your thoughts with the chart? And, talk a little bit too, because we're in a bit of a choppy market. So, how should investors be handling any buys that they do make in this kind of market climate?
Yeah, this one's looking pretty strong. I mean, breakouts we often look for early entries, especially in choppy markets, because if the market's going to go up for a couple of days and then roll over, if you buy a stock when it's breaking out, there's a good chance it's gone up for a few days. So it just feels almost due for a pullback in that kind of unpleasant scenario. But this one, relative strength line at blue dot, which means it's at a new high when it's breaking out or in a base. Uh, it's still not that far from the 50-day line. It was a really tight base here. So it would be, it's not like extended like sometimes they've been, some of these names. Earnings growth, it's going to be decent. It's going to supposed to slow a little bit, but a positive yield curve. And it seems like the economy is still doing reasonably well. So uh, consumers are probably still going to spend. The yield curve is such that it's probably going to be helpful for their margins as well. This one definitely could be actionable. Just depends on how it looks after earnings here. Yeah, I think that just in general, people should be incremental, trying to be really careful, looking for those, like as close to the buy point as possible to in this environment, and ready to pull back if it doesn't work.
Well, good information there, Ed. And that wraps it up for us today on this episode of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune into Stock Market Today with Alyssa Quorum. That goes live after the closing bell. And thanks so much for watching, and we'll see you all next week.